Thank you. So we're back, year 2. How's everyone having a good time at this conference? Important question before we get started. What are we all doing tonight? Do we have some plans? Any cocktail parties? Anything fun? Nothing? No one? You all burned out from last night?
5 to 8 on the veranda.
5 to 8 on the veranda. How do I use this? Just forward and back? All right, so my name is Brett Pojunis. We'll go with a disclaimer for my attorneys. I'm CEO of GPOPlus. I'm really excited to share this with you because last year we were just getting started with our brand new model. Can you guys all hear me? I don't need to use the mic, right? This is not even on. We were just getting started with our brand new DSD model, and now we have over a year of execution with it, and we're really excited with our progress. So let's start with this. How many shareholders do we have in here? A couple? Hopefully by the end you'll all be shareholders. That's my goal, because this is the first time we're really going out to individual investors and the investment community to let you know about our story. So we're really excited. So let's start with what do we do? At the most simplistic level, we distribute products to gas stations and convenience stores. Does everyone get that? You've all been to a gas station or convenience store and purchased something, I'm sure. You always, and I don't know if you ever wondered, how do those products get there? Well, we're very much involved in that ecosystem. Where do you deliver your products to? Well, this is our distribution footprint. It's pretty large. We currently distribute to over 500 locations, but that doesn't do it justice. That's the close-up, and here's the extreme close-up. These are all the stores that we visit every single week. How do we do that? Well, when we acquired this company, the company was called Betterment Retail Solutions, and they had one regional hub servicing that entire area. It was completely inefficient. We had box cars going on overnight runs with per diems, hotels, maintenance, all these expenses. So what we did is we moved to more of a traditional hub and spoke model. We call it regional hubs and mini hubs. The regional hubs, they support all of our mini hubs, and our mini hubs, they can support up to 200 stores. One thing I do want to tell you, over the last few years, we've invested just over $4 million into the infrastructure and building the foundation of this company. And a lot of my investors at first were like, what are you doing? You only have 500 customers. Why are you going to spend so much money on it? Well, we want to scale. Our goal is to be in 20,000 locations by the end of 2027. We'll come back and do napkin math on that. When you look at what we do, it's a little bit different. Actually, it's very different than a traditional distributor. We do what's called DSD. That stands for direct store distribution or direct store delivery. What that means is, in lieu of our competitors, they take like a pallet and they drop it off in the back of the convenience store or gas station. Now the onus is on the store manager or the store owner to take it apart, depalletize it, put it into the inventory, and order again. We take away all those pains, all those problems, because we send our drivers to every single store, and we actually physically go into the store, we replenish all the products, and we go on to the next store. We have an amazing service that we offer. We call it our white glove DSD. When we started down this path, we're already publicly traded. I'm a one-trick pony. I know the public markets pretty well. So when you're publicly traded, you have to follow GAAP. Underneath GAAP, you have this thing called ASC 606. Who's familiar with that? You should all be familiar with that. It's revenue recognition. So if you want to be able to recognize the revenue that your company's generating, you need to hit certain check boxes for each different piece of revenue. So what we did is we started off, I don't have my phone on me, but we started off with building a piece of technology where we'd go into the store like this. We'd take a before picture. We would add all the inventory that we just added, kind of like a PO or an invoice. Then we would take an after picture. And if you look on the far right, it's kind of cut off, but the manager signs off on that. So we basically satisfy being fully compliant for ASC 606. Along the way, we started developing some AI technology. We started doing things like driver efficiency. Why does this driver spend 18 minutes in this store and 27 minutes at that stop and 23 over here? What was the variable? What was the difference? What's the windshield time? Meaning, how much time in between each stop do they have? What routes are the most efficient in doing efficient route management? So we've barely scraped the surface as to what we plan on doing for the AI. But understand that we've got an amazing tech stack that we're currently redeveloping from scratch. We started with the first line of code in the wireframes about 2 months ago. And so we're really excited about that. Once we have our own platform, then we can customize this exactly how we want for our needs. And I got news for you guys. In 4 years, we'll probably be a data company with all the data that we have. So let's talk about the products. So initially, to get our foot in the door, we started with hemp and alternative products. So CBD, Delta-8, Delta-9, all the cannabinoids, kratom. And why do we do that? Well, it's competitive, but most people are going after smoke shops and vape shops. They're not going after convenience store chains like we have. And what we put together is called the Feel Good Shop Plus. And the Feel Good Shop Plus is a curated product mix of all these products, these alternative products, these hemp products, these Delta-8 vapes, THCA, THCP vapes, Kratom. And that real estate is right next to the cash register in over 500 locations. And so that's put us in a really unique spot, not only as, as a distributor, but as one of the leaders in that alternative product space. So we're one of the top buyers. We control that real estate. To the right of the Feel Good Shop is our nicotine shop. So whatever nicotine brands that we're pushing, right now we're pushing a company called Kumi, and this is disposable nicotine vapes. We make sure that they're fully compliant. We do all the heavy lifting for our retail partners so that they don't have to. An example for that is PMTA, which stands for pre-market tobacco application. And that's something that you need to file with the FDA to make sure that your vape products are safe. So let's talk about how big this industry is. Actually, I'm going to go back. Hopefully you guys have, whatever, we're going to be stuck here for a second. If you saw it, don't participate. But tell me, how many gas stations and convenience stores do you think there are in the US? Just start saying some numbers. How many? 10,000? Wrong. Who else? We have over 152,000 gas stations and convenience stores in the US. That represents over $859 billion with a B in annual revenue. Now let's get away with fuel sales, motor sales, and let's focus in on what we're focusing in on, which is our in-store sales. That number is massive. It's $327.6 billion in annual revenue. And what we've learned over the last few years is that I don't care what gas station or convenience store you go into, look around. About 80 to 85% of all the products that you see, they're distributed by just a handful of distributors. Your Hackney, your McLean, your Core-Mark, your Performance Food Group, Frito-Lay, Coke, Pepsi, Red Bull. But the other 15 to 20%, that's the big pain point for all these retailers, whether it's a chain or an individual independent store, that's the pain point. That's representative, especially with the larger chains, of sometimes over 50 vendors. And the category managers would rather work with less companies and less distributors and less vendors than more. And since we're already going into the store every single week, we have a massive competitive advantage. And so this is going to be the focus moving forward. Now, I'm not saying we're going to get out of the age-gated business, the age-gated business being hemp, anything that you need that requires an ID for purchase. We're not going to get out of that, but my goal and the company's goal is over the next year, we want that revenue to be representative of just 10% or less, preferably, of our total revenue. Why? I'm like neurotic with this stuff. I've got Google alerts at the state, county, city level. What's going on with CBD laws and Delta laws, and it's constantly changing. I just want to sell windshield wipers. I want to sell stuffed up animals. I want to sell stuff that's easy and has a long shelf life, that has a high sales velocity, and of course, has high margins. But this is going to be our focus, and we're already well on our way. Currently, our makeup is we have a couple major chains as customers. As I mentioned, we have about 500 locations. The last 2 years, I challenged a team. I said, we need to get really, really good at DSD. And that means everything. Every time we make a mistake, put an SOP in place, correct it. Every time we find a problem, we find a solution, put an SOP in and correct it. Every time we want to try new things, it's a lot easier to fail at 500 locations than it is at 5,000. So we had a lot of experimentation. We tried a lot of things. And the good news is I'm pleased to be able to tell you, we've carved out one hell of a business model that we think can completely scale up. Now let's go back to that 20,000 number. Some of our stores, not many, about a dozen, are already generating over $5,000 a month per store. Now, that's with a limited product category or product catalog. Once we increase our product offering, we get more products into those stores and we bring on more stores, well, I think that our number could be 8, 9, God willing, 10,000 a month from some of these stores by adding the new product categories. Let's say I'm wrong. Been wrong before, so let's just say I'm wrong. Let's say it's 3,000, which is significantly less than some of our top stores today. If we have 20,000 locations, that's $60 million gross per month, $720 a year. I'm good at this, so I think that we can get over $1 billion valuation. And we're trying to get there by the end of 2027. Now, along the way, we can't just wait for that. What we've done, in essence, is we've added a couple more sales channels. We're at a point now where I shared with you, we spent the last few years getting really, really good at DSD, so now we can finally start to do other things and add additional sales channels. Notably is this, we cut a deal with a company called SurgePays. SurgePays has a sales operation facility down in El Salvador. They currently are in how many bodegas?
Their network's over 12,000.
So they're currently in over 12,000 bodegas where they're already selling to those bodegas, smoke shops, bodegas, gas stations, and convenience stores, and they're doing what's called mobile top-up. They already have their banking information. They're already working with them. So what they're doing now with us is they're going to start with 6 seats. We're starting now. We're working out all the kinks. It's going to take a few months to really bring everything on and really get it fine-tuned. But the idea is we can scale up to potentially over 100 people if we can start to make this profitable. But they're going to start calling and they're going to be adding new revenue streams for us. And just so you guys have some industry averages, when you look at some of the brands, whether it's a Delta Gummy or a THCA pen, what happens is the companies and the vendors will set up their own sales team internally, and the average seat generates $50,000 a month in gross sales on the low end. Once they start to get established, it's $80,000 to $120,000. And for the real superstars, they're doing over $500,000 a month. Go back to the small number, $50,000. If we have 10 seats, that's adding an additional $500,000 monthly, $6 million annually. And that's a big bump. Last year, we did $4.3 million in gross sales, and that's in a non-growth year. So we're extremely excited about that. In addition to that, with Surge, we're also doing our own in-house sales team where we have 12 seats in our Las Vegas office. By the way, anyone else from Las Vegas? No?
There are a lot.
There you go. That counts. You're probably there more than me these days. But anyway, so we have a whole office that's been a ghost town for the last few years because all of our operations have been in the Southwest and the Midwest. So now we're able to start monetizing our office, and we want to get about 12 people on the phone right away. And we're going to start launching in Las Vegas. Currently, we don't generate a dime of revenue in Las Vegas. So we're going to be fixing that. Then on the bottom left, like I shared with you, we have our regional hubs and our mini hubs. Well, one of the things that we need to do to get more product categories is we need to do a network upgrade for all of our warehouses. Right now, like if you look at our main warehouses, they're swamp coolers. We need what's called ambient cooling, air conditioning. So what we're going to do, since we have to upgrade them anyway, we're going to be adding a cash and carry component to our regional hubs, and our mini hubs, they're all going to be cash and carries. For those of you that aren't familiar with cash and carries, when you look at, like, again, bodegas, smoke shops, vape shops, gas stations, convenience stores, whether it's chains or independents, a lot of them choose to shop at cash and carries. They do that because it's convenient. They do that because they didn't order something, they ran out of a product they needed immediately. Sometimes a cash and carry will have a delivery component like we will. And so that's a way to take an expense, a fixed expense, every month and try and monetize that and turn it into an actual revenue stream on our regional hubs. And then with the mini hubs, instead of going and trying to find 3, 4, 5,000 square foot warehouses with air conditioning and help me out, I forgot not a driveway. You know what I'm talking about. Thank you, a loading dock and like a mini office. We're going to take that and just get a retail component where we'll have ambient cooling because it's going to be AC. And that's going to allow us to scale very, very quickly. And then once, I think by the end of this year, we should have about 6 or 7 cash and carries deployed, which is really exciting. That's basically my story in a nutshell, and I'm going to open up to any questions that you guys have. Not all at once. Yes, sir.
I have kind of a leading question. But
I like leading questions.
in terms of problem solution, when you talk about the fragmented 15%,
Yeah.
I know that most of these chains don't have any kind of regional warehousing and they're kind of putting everything down to the store manager. How do you help with that?
Sure. So the question is, when we're working with these chains and they don't have their own in-house warehousing, what is our solution to that problem? And it's a great question. Thank you for the leading question. When you look at some of these major chains, they don't do warehousing. And so when it comes to products like their own private label products, whether it's like beef jerky, potato chips, water, whatever, what they have to do is they order that on a per store basis. And this is true for all the chains. And all those stores, they have the same MOQ. So they don't care if you're in a thriving metropolis like Dallas with a ton of sales, or if you're in a rural area of Wichita, Kansas, you have to order the same amount. So one of the services that we supply, again, I can't emphasize this enough, by being in that store every week, this is what gives us the ability. We can do all that warehousing for them. So instead of a store with a low sales velocity, where they need to buy the same as a store with a high sales velocity, we can just distribute exactly what they need for that week. We can also do other things that is kind of unheard of right now. Let's use beef jerkies. If we know that we have beef jerkies in a store with a very low sales velocity and they're expiring in 2 months, we can take those out, put new ones in, and take these and put them into a store with a high sales velocity. Why? Because we have all this data now, so we can actually do all this stuff. And it goes beyond just their own private label. All these stores need cleaning supplies, Fabuloso, Windex, etc. And when you buy something, you get a receipt. They need all the office supplies to run their business. It's the same scenario. They have to place an order for a full quarter. And then the other issue is when they get it, where are you going to put it? We're going to take up extremely valuable retail space to store receipt tape? Let us handle it. Since we're in your store every week, we'll be able to place the orders not on a per store basis, but as an aggregate, and we'll meet these massive MOQs, probably get a better deal, and we'll be able to make sure that the stores have all the supplies that they need to be effective and run their business. Thus, taking more responsibility off of the management so they can focus on really running the store. Anyone else? Yes, sir.
So you mentioned in the future the potential that you would more for data collecting. Is that the kind of data that you're collecting on a per-store basis?
Yeah, so let me put it to you like this. The gas station and convenience store industry is ripe for disruption when it comes from a technology standpoint. You got to think about it this way. Our competitors, the Hackneys, McLean's, they've been around 128 years, 140 years. They built their technology rails back in the 80s and 90s. And so they say no a lot. We built on the pinnacle, but right now we're building it at the highest level of technology, the most malleable technology. We say yes a lot. Why? Because once we replace Prism with our own from scratch version of Prism, forget about it. We'll have full control and we'll be able to do that. But to your point, the data that we're collecting is exactly that. So we see what SKU sells at what store, at what time, in what area, and what market, and we can start doing sales forecasting. We can establish trends and identify trends. So there's a lot of things that we can do from that, and that is extremely valuable for anything, whether you're a seasoned distributor or a seasoned brand, and they want to enter into a new product category, we'll have that data. And we'll have that data not only from the big chains, but every single store that we bring on, even the independents. Because the other thing, when we were talking about the number of gas stations and convenience stores, 91,000 of them are single store operators. And the reason we haven't changed the name of GPOPlus to DistroPlus is because GPO stands for Group Purchasing Organization. That's our roots. What we want to do is we want to make it easier and cheaper and increase the level of service for the little guys while servicing the big guys to get those MOQs, which affords us to do that. And we actually started in the CBD space. So we started with CBD isolate. And what we realized back then is if you were buying 1 to 25 kilos, you're probably spending $10,000 per kilo. Well, we realized if we can aggregate them, we can bring that cost down. So instead of paying 10, I'd say I'll give it to you for 8. We're getting it for 65. We're making this bread who's better than us. The problem is the price of a kilo of isolate went from $10,000 to $225. There's no real spread that anymore. But the same concept rings true so that we can go out to these independents and offer a whole suite of products that would otherwise be unavailable to them. And on top of that, that gives us the trust and that gives us the ability to put more technology in there. Imagine if we're running their POS. Imagine if we're running their credit card processing. These are all the things that we want to do and offer as a suite to all these independents. And more often than not, we're going to give it away for free. Why? Because we want the data. And that's how we'll monetize that. Any other questions? Come on, we work really hard. We work really hard. Go ahead.
Fantastic presentation.
Thank you.
Great company. What are you guys looking for here?
So here we're looking for two things. One, we're looking for more access to capital. We're looking for some investors. And as I mentioned earlier, we're trying to get more people to get involved. Any new shareholders? Is anyone interested in buying the stock? Is the market open? That's what we really want. So yeah, we're looking for people to go in the open market and just, instead of just getting on the radar, we're trading at 4 cents a share, 3 cents a share. I know you hear this from every single CEO that we're severely undervalued. We truly are. If you look at our book value, look at the revenue that we've done, look at the assets that we have, we're trading like a $2.5 million market cap. Unfortunately, I have to take the responsibility. We didn't have the wherewithal or the resources or the capital, quite frankly, bless you, to be able to run the business organically and figure that out and communicate with the public markets. It's 2 full-time jobs. And I love doing the investor relations personally. I love doing the roadshows and I love presenting. This is the stuff I love to do. And I think we have a great story. And I think if people really took a chance to look at our filings, look at our website, you'll see that we have a big pathway to success. And I think we've really mitigated the risk over the last 4 months because we made a big turn. I mean, I'll tell you, any other company, if I didn't have the senior team that I have right now, there was 3 things that happened last year. I'm not going to tell you what they are. I'll do it individually. 3 things would have put anyone else out of business. Nonetheless, having to survive 3 different main things. I'll tell you one thing. Texas, they changed their packaging law with 3 days notice. So all of the disposable nicotine vapes that we had just moved in a new brand, we couldn't put a food product on the packaging. Well, all of these new vapes had fruits on it. And if you ask the illustrious Texas legislature, a fruit is a food product, so we had to pull them all. We lost like 12 weeks of revenue of our number one product in our number one state, and we got through it. So I think that we've mitigated a lot of that risk because we've come back stronger. And again, we're able to anticipate things. One of my concerns is I need to onboard more customers. So what our immediate focus is now, since we are entering into a growth mode, is I've challenged the team. I want to get a half a dozen or more stores, like chains that have between 5 and 30 locations within our existing service area. So not to establish another hub. Only thing I need to do is buy another van or something of that nature. And once we're able to get that and onboard these customers, then we'll really be able to anticipate what the trials and tribulations are going to be. Then we're going to be able to scale.
Is your I think it's book value under 50 million right now? So an investor, if you buy on the public market, is it still 1202 QSBS qualified small business stock?
We're still small business, yeah.
Zero capital gains at the national national level. Yeah, if you hold for 5 years.
Yeah, my tax attorney told me never to answer questions like that. Don't open yourself up to liability, Brett. But no, yeah, we'll qualify for that. We qualify for that. And again, so I think our short-term capital needs right now is we're looking for about $500,000. We don't really necessarily need all of that today, but our goal is to get cash flow positive and start profiting and then be able to self-fund. And I think that with a little bit of luck, I keep everyone that's asked me, I'm like, let me wait till Sunday's numbers. But with a little bit of luck, February, we might be cash flow neutral. And if it's not February, it's certainly going to be March. I don't want to say certainly. I feel very strongly it's going to be March. And then once we're able to do that, there's a lot of little things that we can do. I'll give you an example. We have a product called High Cloud. High Cloud is a 25 mg Delta 9 gummy. They're awesome. They hit every single time, but not too hard. You're not drooling on yourself, but it shuts this down and it lets you just relax. And when we manufacture our products, we double, not increase by 5 or 10%, we double our margins. And so what we've also realized is we've put 5 different Delta vape pens in the Feel Good Shop Plus over the last few years, and they're brand agnostic. It doesn't matter what we put in there. As long as it looks decent and it works, we're going to sell them. And we're going to most likely have some sort of growth rate. And so there's a lot of little things that we could do with a little bit of capital that would get us much further along. And now we can finally take a step back and start doing these other sales channels and trying to identify these other opportunities and start executing on them. And we do need to get some more people on the management team because I can't keep slave driving my team, myself included, but we need to get some more help on the administrative time.
Is all the stock common, or are there different stock classes?
There's different stock classes, yeah. We have 2 classes of preferred and we have common.
And what would the 500K be invested under?
Common, or note, or however we would structure the deal that makes sense. I'm open. As long as it makes sense to to the shareholders and to the company long term. Because as I mentioned, I really do believe that we've mitigated a lot of the risk and we have turned that corner, and now it's going to be about growth. And the money that comes in now is accretive. It's not paying last month's bills or last quarter's bills or paying back people that let us borrow $5,000 on their credit card. We've been knifing it out in the trenches. You got to understand, this has not been easy. I'm not going to cry on your shoulder because this is what I signed up for, but it has been one hell of a year, guys. It's been one hell of a year. But with all the capital that comes in now, it can do other things like let us go and manufacture our own products. So we'll have $120,000 that we can lay out to then get the product in 6 weeks, to then start generating revenue from it in 9 weeks, and then have that cash flow component.
Do you have a team to do that today?
I have a fantastic team. Let me tell you about the team. I don't know why I didn't do that. So starting with me, you don't care about me. Let's start with Kiernan Nevitt. Kiernan Nevitt came from Duluth Trading Company. She ran all the non-apparel. You guys know Duluth? They do those crazy commercials with the boxers, the cartoons. Big publicly traded company in the Midwest. Well, anyway, so she managed all the non-apparel. She was dealing with thousands of vendors and thousands of SKUs every single quarter, a year out. This is a cakewalk in comparison. But one of the things that she's been able to do is increase our margins across the board by 14 to 16%. Just by negotiating better deals and working with these vendors, which she has a lot of experience. We also have Carol Weiss. Carol comes from Belk's. You guys know Belk's? There's 3,800 locations. It's like a Ross, like a higher end Ross. She was the director of warehousing and inventory. So now we have that person with that institutional knowledge. So we started to get a good team. And I made a lot of mistakes on team. If you're building a company, you're going to make some mistakes. But now we've got a team that we think can really go. Go ahead.
I just have a quick question. You might have, I don't know if you covered it, but all the drivers, like how many days?
16.
How many?
16. Yeah, very, very big. Like I said, we visit there's only a handful of stores that we don't deliver. Like I know we don't go to Taos, New Mexico every week. We go to that every 2 weeks, but they're at all these stores every single week. And again, we've got them at capacity. We're pushing them pretty hard.
And they go from the distribution center to the stores and come home at night, or do they go on the road for a few days at a time?
Well, now we only have 2 overnight routes per week versus 8 before. So we've done very well with that. So yeah, we have just a few people that do the overnights. Most of them will start at a regional hub or a mini hub, do their route, and come back to that hub. Yes, sir.
In Puerto Rico, maybe I missed the early part of your presentation. Are you looking to connect with retailers here in Puerto Rico?
No, right now I want to stay focused on our service area, which is that map that I showed you earlier. So that's Midwest, Southwest is where we really focus on it because we have the infrastructure there. I mean, if we had a great deal here that made sense, I'll look at anything that makes sense, of course, you know. But you know, there's another retailer we're looking at that's in Utah, Colorado, and Idaho. They have 180 locations. It's so tempting because it's right there, and we can put a lot of products into those stores, but we don't have any infrastructure there yet. So I really think I need to stay resolute and focused on building out where we have, you know, existing infrastructure to support this business. And then once we're comfortable with that, on our way to 20,000 stores, Puerto Rico is probably going to be on that list.
Yeah, what is the investment amount? Like you want to go to that new 180-store Utah location. What would be the capital reserve you need to apply to get that launched?
Okay, so there's a couple components to that. One is the foundation and the infrastructure, which would be the mini hubs and the regional hubs, which will now be, you know, cash and carries in the regional hub. So depending on the layout, we just saw this opportunity, and I know we're looking at it right now and trying to figure out what that would look like from a route standpoint. But once they figure that out, it would probably be 3 mini hubs would be my guess, and 1 regional hub. Or we might be able to facilitate that all from Albuquerque's regional hub, and we'd fast track that. And then we'd probably need 4 drivers.
So is that like $100,000 to get it off the ground and start generating revenue, or is it?
Well, no, I mean, depending on the products that we put in. Oh, that's another thing. I probably failed to mention this. We negotiated deals with all these vendors, with the exception of one, where they give us all this product on consignment. So we pay them remittance payments every 2 weeks. And when we give them the remittance payment, we also give them all the data, which they're floored with. And so most of these people, it's called scan-based trading, so it's consignment. We have one vendor that's a smaller vendor, but we have to put 15% down with every PO. Everyone else, we just put in the PO, comes to Lubbock. From Lubbock, it gets sent out to all the mini hubs. So we won't have a massive capital expenditure if we're in the same categories that we're in now. But if we add new product categories that are more general merchandise, then we won't have that luxury. We're going to have some capital to come up with. So one of the other things I'm looking for here is kind of like a credit line, so that we have, you know, the ability to get through cash flow over, let's call it 180 days. Let's not say 180. So let's say 4 months, 4 or 5. Let's say 6 months, just to be safe. Anyone else? All right, well, thank you guys for your time. I really appreciate it. I'm here to meet with any of you guys one-on-one, and I still have some time this afternoon. So thank you very much, and I hope you guys all become shareholders of GPOX.